Investor Connect podcast program. This is Hall T. Martin. I'm the host of the show, in which we interview angel investors, venture capital, private equity, family offices, and many other investor groups for startups and growth companies. I hope you enjoy this episode. Thank you for joining us. Well, hello, this is Hall Martin with Investor Connect. Today we're here with Willam Chu of SparkLabs FinTech. Willam, thank you for joining us.
Hello, Hall.
Good. So just wanted to learn more about what you guys are doing there. And tell us, first of all, what was your background and what led you into early stage investing?
So my background started off in consulting and some investment banking, but I actually ran my own family business, which is in apparel, both manufacturing and wholesaling, for a good number of years. I was living in the US as well as China, running that business. But about 6 years ago, I wanted to diversify out of that business. And I was involved in private equity in Hong Kong and was involved in a couple of pretty high profile deals, one being Lufax, which is a wealth management exchange based in Shanghai, a Ping An subsidiary. And the other one being Ping An Good Doctor, also a Ping An subsidiary that's involved in online healthcare, telemedicine. And that sort of led me to what is now my role in SparkLabs, which is in early stage investing. I wanted to really get more involved in the early stage part of the business because I think that's where I feel most value can be added from a fund standpoint, from an accelerator setup standpoint. And my friends who started SparkLabs back in 2012, they built a very successful model in Korea. They had become the top program in Korea within a number of years. And at that point, they were starting to think about expanding into other parts of Asia. So we thought, okay, well, China being obviously a very important locale going forward, how am I going to be a part of that? And that's how we started SparkLabs FinTech. And from there, I put together this structure that we have, which is a partnership with Ping An. And that's where we are today.
Tell us more about SparkLabs FinTech and the relationship you have with Ping An. Can you tell us more about that group and what exactly do you guys do?
Sure. So a little bit about Ping An first. For those members of the audience that may not be familiar with that name, Ping An is one of the largest financial services group in China. It's got close to 200 billion in market cap. I think in terms of market cap, it is the largest insurance player in the world. But Ping An's really repositioned itself over the last 10 years to become more of a technology company. It has dedicated close to $1 billion every year over the last 5+ years to invest in technology, proprietary technology. And they have developed a bunch of proprietary stuff that's top of its class. So it's got a very strong facial recognition technology that's being used not just internally, but also something that they provide as a service to other institutions. They have a couple of very strong tech spin-offs. One of them that I mentioned was Lufax, which is now the largest peer-to-peer lending platform in China and evolving into more really of a wealth management platform overall. It's got the Ping An Good Doctor platform, which is a online medical advice, telemedicine platform that also has a huge offline component to it. And that business actually went public earlier this year in Hong Kong, raising $1 billion US. So Ping An has really become more of a technology player than your traditional financial services player. And we believe that by partnering with them, we're getting access to a very vibrant ecosystem of customers as well as technology that is top of its class. And we think that we can help by bringing in new businesses from not just domestic China, but also offshore to help continue their pace of innovation.
So you're broader than FinTech. You also cover health tech and smart cities. And curious why those three, FinTech, health tech, and smart cities, what's the focus there?
So Ping An started off as an insurance company back in the 80s. Over the last 30 years, it's evolved into a truly diversified financial. It's got basically financial licenses to cover anything that's financial services related. But as they start to evolve into more of a technology company, like I was saying, it's starting to then realize all the other things that their capabilities are actually very well fitted to do. So in terms of insurance player, getting into healthcare, I think the relationship is very obvious. And especially given the fact that health insurance, as well as the health system in general in China, is still very nascent, is still sort of underdeveloped. So they found that there's a role for them to play there to become sort of the leader, the main portal of the healthcare world for China. So that explains the focus on the healthcare side and the health tech side. In terms of smart cities, Ping An has also a very broad reach in China with different provincial governments. And a lot of the governments have been working with them to develop tools along whether it's traffic related, disease management related, education, cybersecurity, or just public safety in general. And that becomes sort of their smart cities model in terms of how can we build a technology business that enables the state level, but as well as also at the startup level to continue to improve public life, civilian life in China.
So tell us more about the state of investing in China's startups. Where is the industry right now and where do you see it going?
Well, I think investing in China has been obviously something that's a very popular topic in, I guess, across all different levels, all different stages of investing. I think China has been a hotbed for investments. I would highlight the fact that as you look at over the last, say, 5-10 years, investment valuation across the board overall has been steadily increasing. But in China, I think that's picked up quite a bit as well, more so than the rest of the world. That speaks to the fact that I think there's a lot of accelerated innovation coming out of China. So it's become a very competitive space, right? I think there are many household names now that people are starting to recognize outside of China that are actually China-based companies, Ali and Tencent being the obvious ones. But there are also many other big companies like JD, Meituan. Those are all China-built companies that are starting to become well-known across the world. So I would say that the state of investment in China is actually quite mature, extremely competitive. So it's very important for whether it's a fund or a business to be very clear about what their positioning is and what value they're bringing to the end user as well as to the investor, as the case may be.
You hear a lot about certain trends coming up in the China startup scene, AI being one of the big ones. What do you see as the top 3 trends among startups in China as far as which are the areas getting the most traction?
Well, I think AI cuts across just about every industry, right? I think the fact that China has, let's just say it may be a different set of privacy rules and data sort of rules, I think allows companies to have access to data that's a little bit different from in other parts of the world. So at the end of the day, AI, machine learning, it's going to be about access to data. And I think that is extremely helpful in helping a lot of these Chinese companies leapfrog some of their offshore competition, right? So in terms of trends, I would say that data is definitely a big trend, right? I think AI cuts across just about anything. When we talk about whether it's lending, it's certainly playing a big role in terms of creating the right kind of credit assessment tools via AI. We're seeing a lot of that also translate into customer relationship management. How do we better understand the customers based on data that we're receiving? The other trend I would point to is maybe blockchain, right? Blockchain, even though it's a technology that arguably is at this point globally talked about, but in China is also getting a lot of traction. Not so much on the ICO side, but we're seeing a lot of financial institutions, insurance companies starting to adopt blockchain for both security purposes and cost concerns.
So, William, what is your investment thesis for the startups that you look for? What fits your fund and what makes a startup a good fit for your group?
So we're running a little bit of a unique outfit because of our relationship and our structure via our partnership with Ping An. The way we're trying to address this is what kind of technology companies can we bring in that would benefit the Ping An ecosystem, right? I think the way we want to help the startups in this manner is how do we help them integrate into the Ping An environment? Now, Ping An has, between its insurance business as well as its internet businesses, over 400 million customers. So it's a pretty staggering number. Being able to access even a part of that user base is going to be a significant boost to any startup that can actually achieve any traction with Ping An. So I think we're unique in that sense that we're actually a platform that provides access to that 400 million user number. So when we look at companies, we want, first of all, identify those needs within particular business units that they have identified as something that they want to pursue. And then from there, what we do is to try to help them find solutions that will help them address that either completely or partially, but we think that that'll be a good fit for them to develop a relationship in the near to medium term. That's how we do most of our screening. Now, of course, there are going to be companies that come in that just completely blow us away, and maybe the fit is not entirely apparent right from the get-go. But we feel that given the size of Ping An, given the scope of everything that they do, that we'll be able to find a home for them. We would still be able to accept those companies into our program.
So you're a strategic investor where you're bringing in startups and applying your partnerships and your user base and your knowledge of the market to help grow those companies. So how does that work for equity ownership of the company? Are you taking an equity ownership and have the right to buy them, or how do you structure those arrangements?
So I guess the difference with our accelerator program and most accelerator programs is that because of the way that this is structured, most of the companies that come through tend to be a little bit later stage than what you would expect from a typical accelerator. And by that, I mean, most of our companies are maybe closer to Series A than closer to seed. And so what you have is companies that are a little bit further along in the valuation scale, but certainly they have a team in place. They have a product in place that's ready to be deployed. So get back to your question about equity ownership. Yes, we do invest. Every company that comes through into our program, we put in a accelerator size check, which in our case will be $50,000 US. And the actual terms will be based on, we will start by looking at what the company's most recent round is. Right? So we don't necessarily dictate a percentage like some other programs do. We respect what the companies have done up to this point. But the fund has the capability to then follow on with a larger check once we see which of the companies in a program has achieved exceptional traction and success. So the way we look at it is the first check allows us to get our sort of skin in the game. But what really happens in terms of where we see the returns being amplified is when we do that follow-on check, which would be in the $500K to $1 million range.
You look for companies outside of China. Do you consider those in the US and Europe as candidates for your program?
Yes, we actually operate as a global program. So for our first cohort, which is actually currently happening, and we are having our demo day next month, October 17th in Shenzhen, the 10 companies in our first cohort right now, 8 of them are actually not located in China. So we have companies in the US, in Europe, a number of different Asian countries, including India, Singapore, Pakistan, and of course, where we are as well in Hong Kong, and we have one in Shanghai and one in Beijing. So it's a truly global program, and the way we look at it is we want to bring in what we believe is the best technology and the best fit with what we're looking for.
For, say, a U.S. company that is accepted into your program and then goes through the accelerator, what ongoing presence do you expect them to have in China going forward to serve that market?
The program with Ping An is also in partnership with the local Futian government. Futian is a district in Shenzhen that's best known for being sort of the Wall Street of China, if you will. So the government has been very supportive in this effort and trying to help us make the landing in China for some of these companies a lot smoother. So part of the program is to also help companies establish a presence in China through this program. And so when we talk about companies that have found its sort of business model in China, its a structure of partnership in China, the program then will offer the way to help them actually physically set up an entity. And of course, the program, even though the program ends after 5 months, will be on an ongoing basis, helping support these companies as they build their presence and their strategy in China as well.
So for the companies going through your program, what do you see as the biggest challenges they face when they go through the program and then into the market? What's the current challenge they have in getting up and running?
Well, I think there's always, for offshore companies, a sort of learning curve coming to China. I think the value of the program is they're not coming in blind, right? I think it's very intimidating for companies that are trying to come into China without really knowing who to partner with or the actual background of the partners. What we have here is a very credible and reputable platform via Ping An on the China side. And then SparkLabs is a very seasoned operator of accelerators. So we think we're putting best of both worlds together to offer something to the startup community. But having said that, it's still going to be a pretty challenging process. So, our role is to continue to advise and mentor the companies through their 5 months in the program, as well as beyond that as part of our alumni network. I think that's the biggest challenge.
From an investor point of view, what do you see as the main risks you have to mitigate with these startups? In some areas, we find regulatory, others as technological, others as user adoption. But If you had to broad brush it, what do you think is the risk that you spend every day working on with your startups?
Again, I think us being unique in the sense that we are sort of like a partnership and more in the form of a corporate sort of partnership. Everything you've mentioned, whether it's regulatory or technological, those are still things that we have to consider. But for us, I think that where we find ourselves spending the most time on is helping these companies make connection internally within Ping An, helping them navigate. After all, it's a big organization. We want to make sure that the connections are going to be valuable. So definitely helping them make the most out of every connection that they make within Ping An. Now, even outside of Ping An, SparkLabs' strength, we're a global group. So we have partners distributed across the entire world in different markets. So the value we bring in is also helping these companies connect with companies outside of China as well. So even though this is a Ping An themed partnership, we also want to make sure that we bring value to the startups also outside of Ping An and help them make connections outside of it. So that's our dual role, is to facilitate a lot of these connections for the startups.
Sounds good. So in the last few minutes we have here today, what else should we cover that we haven't?
Well, thank you, Hall. I really appreciate you having me on today. Maybe one thing I can give just a little background to also SparkLabs Group overall. SparkLabs is as I mentioned earlier, an accelerator platform. We've started in Korea, and now with this partnership in Ping An, we're continuing to expand. There are a few things that we've also built, and I wanted to share with the audience here. We have an agricultural tech program that's actually based in Australia in partnership with the New South Wales government. We just finished our first cohort. That program is alive and well. We just announced an energy program in Oman, also in partnership with the government over there. And then a few other things that we are working on. We have a program that is going to be launching later this year in Taipei. We have something that we are going to be launching early next year in Washington, D.C. That will be our first foray into North America. That's going to be a cybersecurity platform, accelerator platform. So the group is starting to really expand and hit our stride. So we believe that we're going to create a pretty interesting mix of different programs and verticals that for investors looking for exposure across different areas of technology, that we're going to be a pretty interesting opportunity to look at.
Well, that's great. Well, how best for the audience to get back in touch with you?
Please feel free to email me at wchu@sparklabsfintech.com. You can also find our website at sparklabsgroup.com. We also have our second cohort application just opening up now. You can find us on F6S and also on the SparkLabs FinTech Facebook page, which has all the application information on there as well.
Well, that's very good. We'll put those in the show notes so people can get back in touch with you. Appreciate your taking time to share that with us today. Sounds like your accelerator is truly going global and leading that charge, and want to thank you for all the hard work you're doing in making that happen, and appreciate your taking time with us today.
Yeah, thank you for the opportunity to connect with you and to your audience.
Very good. Investor Connect helps investors interested in startup funding. In this podcast series, experienced investors share their experience and advice. You can learn more at investorconnect.org. Paul T. Martin is the director of Investor Connect, which is a 501c3 nonprofit dedicated to the education of investors for early-stage funding. All opinions expressed by Hall and podcast guests are solely their own opinions and do not reflect the opinion of Investor Connect. This podcast is for informational purposes only and should not be relied upon as a basis for investment decisions.